Right now, we are 6 partners and we're working on about 12 deals.
A C-suite's kind of like a basketball team where if you don't have a complete basketball team, you're not going to do well.
During that period, we grew the company from about $200,000 in revenue to a $10 million run rate.
Hi everyone, this is Alexandra Szuszkiewicz and you're listening to Investor Report podcast. Today's guests are
Damon Kirchmeyer.
Bill Kurth.
Nice to have you here. Thank you so much for coming. So today's conversation will not only have 2 guests, but also will have 2 episodes, 2 parts. So watch out for the second episode that we'll post. Today we'll be talking about the fractional C-suite. So hiring on-demand executives. Please introduce yourself and tell us what numbers describe your business.
Well, our business, we're Rectify Partners based out of Boise and recently in the Salt Lake market. Our business, we are a large group of affiliates that is growing by the day. Right now, we're 6 partners and we're working on about 12 deals.
This company was formed when a couple of us got together and quickly realized that there's a lot of companies that need a full C-suite. A C-suite meaning a CEO, CFO, CRO, CTO, CMO, and so forth. A C-suite's kind of like a basketball team where if you don't have a complete basketball team, you're not going to do well. And many companies who are earlier stage can't afford a full-time C-suite. It gets very expensive. So we provide the C-suite on a fractional basis. So the company does have every C-suite in their arsenal, but are doing so on a fractional basis, which is much more affordable. It's the amount of C-suite needed at that time, and it can either ebb and flow based on the needs of the company.
So I have a very controversial question. I understand the cost of the C-suite that is very appealing to do it on the fractional basis. Isn't it a little bit like when you hire somebody from the outside coming as an advisor for like 1 project, 2 projects, aren't they not engaged enough?
Well, to your point, we're very small and boutique. We don't try to have too many customers for 1 C-suite person. We limit the amount of customers per person so they can go deeper. A lot of fractional C-suite out there are very large companies, they're very wide. We're very much more narrow, but we go deeper into a company.
So most of my comments are from the perspective of a customer, because I was a customer of Rectify for 3 years, and I've been a partner now for 3 months. That's most of my experience. And what I did, I was running a small company, a tech services company. I got to a point, we were growing, we were successful, but we couldn't afford to hire just anybody I needed. At one point, I needed some help to come in because we were trying to raise some money. I needed a forecast. So I contacted Rectify, Jeff, our CFO partner. He came in, he put together a nice forecast for me, and that was fantastic. But he also noted that we had a few other issues in there. Said, hey, look, I'm really struggling on the sales side. He says, okay, well, I've got people I can bring in. So he brought in essentially a chief revenue officer and helped me organize my sales team. And said, okay, how are you tracking all this? And, well, financials. He says, that's good, but you can't see into the future with that. So they helped me put together a CRM. They found one for me. They put all the data in. They got somebody to manage it for me going forward. They put together my dashboards. They made my job a lot easier. With that, which I thought it would be, a couple month engagement, wound up going for about 3 years. During that period, we grew the company from about $200,000 in revenue to a $10 million run rate. With me as the only, senior executive, I had great people, but we couldn't afford a CFO and a, CMO and all these. Yeah. But on a part-time basis, I needed them a couple hours a week. Rectify filled that. And once we got to a large size, then we did hire those people, and then Rectify went on to another project.
How well did they get to know, as opposed to other people who came in? What was the difference in knowledge?
Yeah, it was critical. We had hired other consultants in the past, and they came in to perform a particular project. What I found was that the model didn't allow them to understand my business enough. I got a forecast, and they crammed my financials into their forecast model, and it was garbage.
Yeah, that's what I thought, that maybe like hiring outside advisors, that's how it works usually. What is different about Rectify?
Well, there's a couple of points. One is that we touch all points in the business. Okay, we're not just coming in as a CFO. There's a role for that, and there are some really good groups that do that. That's one aspect of the business, and it's usually if you need money or you're running short, there's usually more problems in the business. So we get in and we understand the rest of the business. Is it operations? Is it sales? And we get a better understanding of the entire business, not just from one narrow focus. That helps a great deal. And then here's the second point to it. If the company will accept it, we'll work for sweat equity. Very good way of aligning interests, because if the company is not successful, we don't make money. For the most part, we've been in our careers, we've been successful. We don't necessarily have to go work a day job, and this is something we enjoy doing and we want to see other people succeed. And we can structure it so that it works for the company and not taking so much cash out of the business.
Right.
When that happens, we align interests. We're highly motivated to make the company very successful.
So how often does it happen when you do the sweat equity?
To date, it's been in a majority of the businesses. We take at least a portion in sweat equity.
Okay, so you take the cash that they give you and then a little bit of sweat equity so that the interests are aligned.
Right.
What is the ratio? Is it like 50-50? Is it 20-80?
Really depends on the customer's needs.
Okay.
The thing about this is driven by the customer's needs, not by our wants. We're agnostic to whether we do sweat equity or whether we do it for a fee. It's really up to the customer and their situation. Mm-hmm. How much cash do they want to preserve? How much help do they want? A lot of them want us on their team because they realize that, like many, if you just kind of float in there and do your job and float out, that's it. Once we're on the cap table, we're partners for life. They have our undivided attention forever. Yeah. And they get that.
We have from 10%, we have one proposal, we haven't closed it yet, but one proposal at 100%, at least for the first 3 months.
Yeah.
Is it because you love the company so much, or like what decides on taking sweat equity 100%?
It's the potential of the company. Okay. It really is, and in this particular case, fantastic company. Has got a great market. The product is fantastic. Just suffers in the other areas, execution. Mm-hmm. Getting the financing in. There are a few simple things that we need to do, but this company can be very successful.
Yeah. Part of what we're doing is we're going to be raising cash for the company in the form of debt and then later equity. But for the time being, we're going to work on the company, get it ready to take on cash, get them cash. A process will take 3 to 4 months. And so in the meantime, with no cash, we're electing to just put our faith in the company and what we can do for the company.
Have you ever had a situation where you put a chance on the company and then it didn't work out?
As a business, yes, it happens.
Yeah.
Personally, it happens.
Oh.
In doing any type of equity, there's hits and there's misses, and that's just part of the game. And you have to be cognizant of that. You have to manage the risk, but the risk is always there, and you never hit 100% of the time. Yeah,
I haven't had that experience yet. I've only been here a little bit. It will happen, but really, we're taking on clients. We're only taking a few, and we're taking them on based on their probability of success. They're already good companies. They just need a few tweaks, maybe a little bit of help. Do some of the lifting. They're experts in their market. They're experts in their technology. They know their customers. Mm-hmm. They can sell. We just come in and kind of shore up the rest of them, free them up to do what they do best. That's a really good model. You can find companies and people that have just nailed the hard part, and we just come in and do the easy part. I mean, for us, it's the easy part. For an entrepreneur, it can be overwhelming because you're having to raise money. You're having to run the company, the operations and personnel and financials and all this. Yeah. And there's rarely time to get back to do what's really important, which is sell.
So you provide the answer to a certain task rather than integrating with the company on the deeper level, right?
Yeah, it's much more on an outsourced basis and doing providing these other tasks. But something you brought up is critical. The culture of the company you do have to match. You do have to understand, and you have to be trusted. Ultimately, that's what it comes down to. You're successful if they trust you and they believe you, and then they do what you're recommending, and that takes trust. Yeah. So you do have to build that.
As a CEO, you're bringing, let's say, Rectify to your company, but then maybe your accounting managers or sales managers, they may not agree with your point of view.
Yeah, let me give you my example from my experience when I hired Rectify. Okay. So they came in, and one of the early things that Rectify wanted was we needed to restructure our chart of accounts and accounting because we couldn't really tell one service from another, one market from another, and where the profitability was. So we needed to restructure it. Well, that didn't sit well with the accountant. Not everybody. Okay. I mean, not everybody likes change, and it's difficult. Yeah. So They had to come in, again, it comes back to trust. We're doing this, this is what we're doing, but they also had to come in and say why. Okay, this is why we're doing it. We're doing it because we may find that we're not really, we shouldn't put so much emphasis in this market. Right now, we can't really tell. Everything's bunched together with, in our accounting system. We can't cost account and break it out into what makes money for us.
Yeah.
So by restructuring this and redoing it, it could lead to huge profitability difference for the company. And just building that trust, explaining the why, not demanding that you just do it because I said so, is critical.
What did they change?
It took a couple of weeks,
Okay.
but what she found was that that Rectify was working very closely, helping migrate the data, showing where it goes and why we're doing it, and then seeing the outcome after a couple of weeks and how we could then track the products by market. She came around and understood it and was a part of the team.
What expertise fractional C-suite bring? Like what types of executives you have in your quiver?
Our partners have experience in CEO, COO, CFO, obviously, CMO. I mean, and we even have a fractional attorney now, so CLO.
That's awesome. Love it.
Which has been very helpful. As far as our professionals, which is the partner, not a partner, but the actual professionals we utilize, these are men and women who have really been at the top of their game and either retired, had an exit. So that's across all the boards. A lot of people who make money decide to slow down, retire, have an exit, but that type A personality that made them successful doesn't flip a switch when you retire. So what happens is they retire, they travel the world, they go fishing, they golf, they do whatever, and realize after 6 months they're bored. They miss the game, they miss the thrill of the hunt, they miss being engaged in these companies. So we bring them back and say, come work on your own terms. And I say that because this transcends all business disciplines and C-suites. People retire from all different parts of a business. Our job is to find them, understand their skill set, and then match them with the needs of a company and bring them together. That's what Rectify does.
How do you find them, and also how do you match those needs? How do you know that this particular person is going to be the perfect CFO for X, Y, and Z company, but the other CFO will be better for the other company? Like, how do you know?
I think the one thing you do is you look at their experience and find out they were CFO, but in what industries were they CFO? Were they a SaaS or tech CFO? Were they a consumer product CFO? Were they CFO of a construction company or a window cleaning service? And so you understand not just their title, but what industries they played in. You then understand the company and their industry and their needs. And quite frankly, culture comes to play. You want to make sure that this person culturally will fit the culture of this company. And there's many different facets of a company culture, but you do your best to understand. You do that, number one, by sitting down with the customer and having a deep interview with them.
Okay. And from the business perspective, is it okay for me to hire the entire C-suite?
Actually, how we do that is within our own company, one of our partners will come into a deal and be what I call the quarterback. So it's their job to come into the company and really handle that relationship. Damon's doing a couple right now. And so what happens is Damon comes in, he sits down at the company, he's a quarterback, he will bring in as needed. So his job is to make sure that the company functions on all levels efficiently. So he'll come in, and usually we're leading with the CFO because you can't really understand a company without understanding the numbers. You can't understand numbers that aren't correct numbers. So we come to a company, make sure that the financials are correct, are in good form. From that platform, we build a set of forecasted financials, make sure they're done correctly. That's all a CFO. Once you do that, you sit back and you look at the numbers, and the numbers will tell you a story. Based on those numbers, we're going to quickly ascertain whether they need operational help, whether they need sales help, marketing. We'll find out where the company's going through looking at the numbers and talking to them. But that's handled by one quarterback within Rectify, who will then bring on these other C-suites as needed, as many hours. So Damon might come into a company and put in 10 hours a week. As he's in there, he's going to realize, okay, I need about 4 hours a week with CFO, about 2 hours a week with CMO, and maybe in operations as well. But he will dictate, based on the company's needs, how many hours these other C-suites come in to leverage the skill.
A point to clarify, maybe, you don't go to Rectify and say, I want to hire a CFO and a CMO. You say, I want to hire Rectify, and we'll place those people as needed.
Because Damon's doing that. As a quarterback, he's doing that, or whoever the quarterback is. Good point. Thank you.
How do I, as a business owner, measure the success of, Rectify coming in and helping me out? And you maybe can speak of that because you were actually the customer of Rectify.
At the end of the day, it's dollars, right? Sales increase. It's your revenue and your margins. Okay, those are the measurements that entrepreneurs really care about. There are some projects where you come in and you have a particular deliverable. Create a financial forecast or put together a business plan or presentation for the bank, whatever those are. Those are specifics. But what we anchor around is we'll do a set of forecasted financials, and we want to hit those revenue and margin numbers. That's the ultimate measurement. We want to see an improvement in the company and hit those targeted numbers that they want and that we want.
Is that only good for startups and early companies, or is it good for all of them?
We had 2 meetings yesterday, and they both fit right into this. One's an 8-year-old company, and they're just a great company. They really understand their industry, and they are profitable, but they can't get over $1 million in revenue a year. They're just stuck and growing at just a tiny percentage. And we do come into those situations, and we see that and evaluate you. All right, well, why are you stuck? Have you already tapped out the market? Is that it? Or is it sales? Is it what is it that's causing you the problem? We pretty quickly identified sales was a problem, and we know that we can help. A second one was the products company, and they've been around for years. A larger company, and over $7 million in revenues. They've actually dropped back a little bit because they had very large concentrated accounts. They lost one of them, and they're kind of just frustrated and tired of beating their head against the wall for so long. They just need a fresh look. It's a good company. It's a great product. They need a few tweaks. They need a little bit of help. They need to get their sales back on target. They need a little bit of a shift in strategy from where they're trying to push into a lower level consumer market into a little higher end, higher margin segment of the market. And that company can take off. It's a mix. More so, it tends to be more on the startup phase because I know this from experience. You get in as a startup CEO, if you're successful, you will become overwhelmed. You don't have the money to hire all the people around you, and you're wearing every hat, and pretty soon you find yourself not spending most of your day doing what's most important.
Yeah. What was the biggest company you helped?
Right now, we're doing a company that has about $300 million in revenue and operating mainly on paper. So we're doing a conversion to really digital CRM, ERP, the whole 9 yards. We're converting them to more of a digital format company.
That's an outlier.
But that's a big one. That's the largest.
At what stage I should be contacting you, and then how the workflow and the whole conversation with you guys looks like, and what is the timeline of the project? Sure. Usually.
Go ahead. Yeah. So when we make contact, and by the way, most of our business, if not all of it, is referred to us. So we don't really do direct advertising. Word of mouth, everything comes out through referrals. It could be their banker, it could be their private equity group investor, it could be someone they know, but it's really based on reputation. So once they're referred, we'll sit down and we'll have an interview. So I'll first talk to them to find out what they think their needs are, where they're at, where they're going. If it makes sense, like we did twice yesterday, we'll bring the team, we'll sit down and do a very in-depth interview with them. We'll ask for financials, projections, and some corporate documents ahead of time so we can kind of understand the business before going in, so that when we're there, we have a very educated conversation. We're going to talk to them about their financials, things we see in the financials, and then ask them what their perception of their issues are, where they're coming up short. And in many cases are correct, many cases are missing a few. But it's a very in-depth, what I'll call a due diligence process or discovery process, trying to drill down very quickly into where their needs are and make sure that they understand the needs as well.
From a timing standpoint, it does take a little bit of time because we're approaching it much more like an investor would. Okay, most of my career has been in investment, and so we're we're spending a little bit of time with the company to understand, can we have an impact? If we can't, we don't want to take it on.
Do you have a threshold? Like if we can hit X, Y, and Z numbers, then we'll take on this project, but below that number, we are not engaging.
Not necessarily.
No.
We don't have a hard and fast number.
Okay.
No.
It's just helping them out.
It's more around their expectations. Can we meet their expectation? Can we meet or exceed? And really, we want to exceed that expectation. If we can, then we want to move forward. If we can't, I turned down a business. It was a consumer products business here recently because we could not meet their expectation. In my estimation, I spent about a week with them, understanding their business, what they were doing, and I could not meet it. We couldn't do what they really wanted and expected. And so we turned them down.
How many executives you have in hand right now?
Yeah, what's our total team? So we've got 6 and then 12, I think we've got right now on the bench.
Okay.
That can be subbed in and ready to go. That team is expanding as the word gets out. We are continuously looking for more really talented people.
Okay, is it mostly in Utah or all over the U.S.?
Mainly Utah and Idaho right now is what we're really focused on. Again, we're not trying to be a large national, very wide, broad company. We're keeping it more boutique, more focused, more selective, so we can really get deeper. So right now we're focused on Utah and Idaho. We have customers in Florida and we have customers elsewhere, but for the most part, we're in these two states, and it's kind of this Intermountain region.
Are there any recommendations that you would give the businesses, the people that are struggling maybe right now? Let's say they have a part of the team, but maybe not built fully. Any recommendations for them? Besides hiring, obviously, the fractional CFO.
Yeah, no, if I may, I think, in my years of investing in companies and being involved in companies, be humble, know your limitations as a CEO. Most companies I've lost on, whether investing, lending, or being part of, were those companies where the CEO had to be the smartest person in the room. They had to touch everything, and they felt like no one else could do what they do. The company bottlenecks. So for those companies, number one, take a real close look at yourself, your skill set, understand what you're good at, understand what you're not good at, understand what you like doing and do not like doing, and really be open-minded to enhancing your C-suite and delegating and giving something up. Most businesses I get involved with are started by a tradesman. They love their product or service or tech or whatever. That's what got them passionate about the business, and they like working on it. As a company grows, the problems with administration, accounting, finance, HR, it takes away from their love of their product, and they focus over here, which really, they're usually not as good at it, they don't enjoy it, and the company bottlenecks. If Rectify can come in and say, listen, you love doing this, do this. Do it well, do it great, do it better than anybody else. We'll handle these mundane tasks over here that have to be done, but we will do this while you focus on your strategy, your growth, whatever, and now you have a successful company. So I would say be realistic about that, knowing what you're good at and what you like, and more importantly, knowing what you're not good at, what you don't like.
Really for entrepreneurs or in the case of longer term companies that are out there, if you understand what help you need, that's fantastic. I'm not good at, I don't like managing people. I don't like finance. I don't like sales. Understand that, and realize there are people that can help in that.
But you help with building the strategy, building where they should go.
Yeah, we will help in those arenas as well. We found generally in a startup company, it's usually focused around a service or a product. Okay, there's one thing, and there's the product or the service or the technology that you're really focused on. And from there, though, oftentimes they're not really certain. You take a shotgun approach and you're trying to sell to everybody. You're not really sure which way to go. So we'll come in and help direct that. You're really profitable in this area, not so much in there. You're spending way too much to reach these guys. It's not worth it. Yeah. Let's take it this way. And oh, by the way, if you called it industrial rather than consumer, then you can go into this market and you can charge a different price point. So we're helping tweak a little bit. We're not experts in the technology. The companies have to be They have to be the experts in their core function. But we'll help you focus that strategy. We'll help you adjust it. We'll get you, narrowed in on a rifle shot rather than chasing everybody because with your limited budget.
At the end of the day, it's the entrepreneur, the CEO, the owner who really has to run the ball into the end zone. Our job is to do the basic blocking and tackling to clear the path so they can run their ball in.
What are the challenges that businesses face when they hire on-demand executive team?
Well, the most common is usually financial. That's usually what gets somebody moving. Where the rubber meets the road is if you're in danger of missing payroll. And that's when, that's often the time when somebody really, finally throws up the flag and says, okay, I need help. That's usually what gets us there, and talking to them. Now, when you dig in, there is, potentially a financial portion of it, but there's a reason why you got there. And we'll often find that yes, we do need to stabilize the business. You need a certain amount of funding. You need, to cut back on these expenses. But beyond that, you got there because your sales aren't performing, or you got there because you're spending way too much in cost of goods to make this worthwhile. You need a better margin to be able to survive. These additional marketing efforts are not returning anything to the bottom line, and so finance usually is kind of your first step in. But then it turns to sales and operations and strategy and all these other areas. It's rarely that it was just a lack of money.
Since these companies are underperforming, how do they even have the cash to pay you guys?
Well, that's what we go back to. Sometimes we do sweat equity.
Okay.
That's the idea. Before we even work up a deal, we look at the forecast and find out, okay, if we can bring in this much money, or if we can do this, you still don't have cash. So I said, right, you don't have cash. Let's do sweat equity. We don't want to bleed the company dry. We want to be enhancing the company. Well, if we came in and bled them dry with all the profits because we're paying ourselves, we're doing a disservice to the company. So that's why we've come up with the sweat equity.
Gotcha. That's a good plan. That's something that is very important for the companies for sure. Are there any misconceptions that businesses have about the on-demand executive team, C-suite?
For the most part, it's still a relatively new concept to most companies. Everybody has heard about fractional CFO. Kent Thomas started the industry in Utah and did a fantastic job. So everybody knows that's available. The rest of it, for the most part, it's still fairly new concept. So they're just they just don't know that that's even available. And once you get in and kind of explain, usually you'll come in from a financial standpoint and say, here, let's take a look at this, work on a forecast. But then you say, but what's leading to all this is your sales are broken. Let me show you how that works. And then they start to open up. It's like, oh, okay, so you can come in and help me, as a chief revenue officer. Great. What else you got?
Well, your gross profit margin is declining over here, or this product here has a greater gross profit margin than this product. Why are you doing both? And really kind of drilling down. Once you have the numbers themselves open up so many opportunities to know the business inside and out.
Yeah.
But it really all leads back to those forecast financials and the numbers of the company.
Yeah.
Without solid numbers, you have no idea what's going on in the business.
Is there anything you would like to add before we finish this segment?
We have collectively, how many deals have we funded over the years? We've known each other, over 30 years?
Yeah, done more than 100.
Lending, investing, running. It all comes down to knowing your company, knowing yourself, knowing your limitations, and being open to taking help and advice to supplement your limitations in a company.
Yeah.
And I think every business owner that I talk to, the first thing I try to do is sit down and number one, ask them, what is your end goal for your company? Is this a lifestyle company or is this a strategic exit? A lot of people know the difference, some people don't. A lifestyle company is a company that you want to start, you want to grow it, you want to live off the profits, hand it down to your kids, build a legacy.
Yeah, and that's a great business. There's nothing wrong with that.
Yeah. A strategic exit is that. It's a company that you're growing, planning on selling it. I think you need to understand where you sit with that because that's going to start a decision tree on how you manage, how you fund, how you do everything with your business. That's your very first decision you have to figure out right away. From there, it's knowing how to put the right people in there, knowing how to fund your business's growth. And I suspect we're going to go into that later.
Yes.
But understanding those two things and knowing how to put the right people in at the right time to supplement what you already have, but be open-minded about that.
And just, one quick point, everybody's heard the statistics where 80+% of all small businesses fail in the first 5 years. It doesn't have to be that way. It's not because they were bad at what they do. It's probably that they were very good at their market, their product, their service, their particular expertise, but not good at the simple stuff, the other stuff, the business stuff, the other stuff that drags them down, their cash flow, managing people, managing their sales. And that's the easy stuff, really. We've done it, dozens of times. That stuff we can shore up. And if the companies understand that and really can focus on what they do best and know that they can outsource a lot of the rest of it, I think it'll help out a lot.
Yeah, amazing. Where people can find you, how they can contact you?
Rectify.net.
As easy as it gets.
Yeah.
Perfect.
That's us.
Thank you so much for this portion, and we'll record a second portion about the financing opportunities for the businesses. So thank you so much again, and thank you for watching this part of the conversation. And have a great day, night, or whatever time it is for you. Bye.